And welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as we all know, today is Thursday. Welcome to the favorite evening session. And we'll be looking to cover what happened in the markets last week, what we're expecting this week, and of course, what we'll be expecting to see in the markets tomorrow, as well as next week. So clearly, there has been quite a number of developments. For this week, I think some of the key highlights include Chinese industrial production improving, while the GDP was slowing down, which was a mixed data. Then there's a Empire State Manufacturing Index, which was slightly higher than expected. And then the effect was cancelled later this evening or this afternoon when you saw Philadelphia Fed Manufacturing Index coming in slower than expected at negative 13.5, slightly closer to the previous reading, but less than the expectation of negative 10.1. So unemployment claims got slower at 228,000 jobs. And this is basically an indication of a much tighter labor market in the US. So as we all said, the labor market is quite inconsistent. I think I have an issue with my microphone. I'll try to reconnect it. So somebody confirm that my audio is clear. So if you join the session, kindly check and confirm that my audio is clear. Awesome. Thank you, Soga, for confirming. So let's progress with the session. So So another key development that we have seen is inflation data this week. So there was quite a number of inflation reports that were being announced this week. So among them, I'll try and filter from the economic calendar. So you can always filter for inflation data, apply the filter, and you'll see all the news concerning inflation. So first data point that we had this week was Canadian inflation, which increased by 0.1% in the month of June, whereas overhead inflation slowed down to 5.1% from the previous reading of 5.2%, but still significantly higher than the target of 2% by the Bank of Canada. So besides this, we also had inflation coming in from New Zealand. This one was at 1.1%. For New Zealand, they do quarterly. So in the quarter, that is between the month of April and June, we saw inflation basically rising by 1.1%. So on the other hand, overall inflation is still significantly high. So I just want to open the data points so that we can go through it together. So quarterly inflation rate was 1.1% and annual inflation remained at 6.0%. So this is still way high, considering that the Reserve Bank of New Zealand is targeting a rate of between 1 and 3%. So there's more to be done in order to get this inflation back to target. So on the other hand, we had more economies reporting on inflation data. The other one was the UK, which reported an inflation of 7.9% annually, which was better than expected. We expected inflation to slow down to 8.2 from the previous reading of 8.7. So in this case, it dropped to 7.9%. So core CPI, on the other hand, for the UK, dropped to 6.9%. Of course, lower than expected. We were expecting 7.1 as the previous reading. So for the Eurozone, final CPI came in at 5.5%, whereas core CPI for the Eurozone was 5.5, slightly higher than the previous reading of 5.4%. So then German PPI, or Producer Price Index, came in at negative 0.3%, slightly missing expectations, but still continuing with the same path of disinflation, which basically implies that CPI on the next reading could potentially be lower than expected. So Japan core CPI year over year will be coming up on Friday. That's a couple of hours from now, and this is where we will be looking to see whether it meets expectation of 3.3%. So in the previous reading, annual inflation in Japan was at 3.2%, and it's the one economy compared to the top economies that is looking to achieve higher inflation. So while all these other economies are looking to achieve low inflation, Japan has been really struggling with deflation, and they want to see inflation stabilizing around 3% or even higher, and that is a goal that they've been working hard to achieve. So while other economies are looking to achieve low inflation, Japan is looking to accelerate inflation so that they can also see wage growth happening within their economy. So with this trend, it's quite consistent, showing that across board inflation data is slowing down. And of course, for the US 2 weeks ago, we saw inflation dropping to 3%, which is just about 1% closer to the Fed target. So going into next week, there's quite a number of news that we'll be expecting. So it's time I remove my filter here, apply, and then check on the next data points that we'll be expecting from next week. So clearly, we expect some good level of volatility to be happening in the markets. So right from Monday, we'll be starting with flash manufacturing and services PMI for Australia, flash manufacturing data for Japan, credit card spending for New Zealand, German import prices, as well as retail sales for the Eurozone. Then flash manufacturing and services PMI for the entire Eurozone, manufacturing and services PMI for the UK, and of course, the same for the US. So that will be quite a busy day with economic data. Then Bank of Japan core CPI year over year on Tuesday at 8 a.m. CB consumer confidence survey. This will be happening at 5 p.m. on Tuesday. Then inflation data for Australia on Wednesday at 4:30 a.m. So the most important data for next week, and I believe this is what a lot of market participants are anticipating, is the FOMC federal funds rate. So this is when the Federal Reserve Bank of the US will be sitting down on a 2-day meeting to try and determine the direction of monetary policy, and the markets are pricing in the potential that the Fed will go for a 25 basis point hike, which would push US interest rates to 5.5%. So while this seems quite possible, there's also speculation that this may be the last interest rate hike that the US is implementing in this cycle, and we could be seeing the market trying to price in this information. So there's a very high likelihood that there will be a lot of volatility coming in from the interest rate data announcement. But of course, more volatility coming in from the FOMC press conference, where the Fed Chair, Jerome Powell, will be presenting a speech, and of course, responding to questions during the conference. And this often leads to high volatility in the markets. So I think this is what a lot of markets are considering and waiting patiently to see what will happen. So the Eurozone, on the other hand, is also expected to be having a meeting, that is the ECB press conference, as well as an interest rate decision. So in the previous reading, they hiked interest rates to 4%, and we expect yet another interest rate hike, perhaps to 4.25 or even to 4.5%. So there will be a monetary policy statement, and then later on, there will be an ECB press conference. So besides this, there will be GDP data coming from the US. Previous reading, quarter over quarter, was an increase of 2%. So this will be very important combined with the unemployment claims data. So as we approach the end of the week, we'll see the Bank of Japan outlook report, as well as the monetary policy statement, and of course, the Bank of Japan policy rate. So the Bank of Japan policy rate is marked here as medium impact, mainly because there hasn't been any changes in interest rates in Japan for quite a number of years now, and we don't expect this to change. So the most important data point here will be the Bank of Japan press conference, basically indicating the way forward for the Bank of Japan. So towards the end of the week, we also look at the GDP from Canada, and then core PCE price index. This is the Fed's favorite inflation measure. This will be happening at 3:30 p.m. Then employment cost index before we end the week with the revised University of Michigan consumer sentiment survey. So that's it. That's what we are expecting in the markets to be happening next week. So clearly, quite an action-packed week. So I hope everyone is ready to take advantage of the volatility that we will be expecting to see from that meeting. So as for between now and next week, we have already seen a majority of the news for the week, and now we are heading into Friday. This is the last day of the week. Clearly, the top news in the morning will be the national core CPI for Japan. But of course, we also be looking at JFK consumer confidence data for the UK at 2:01 a.m. That's just a couple of hours from now. Then retail sales data from the UK, public sector net borrowing, EU economic forecast tomorrow, but tentative, we don't know the exact time. Then core retail sales and retail sales data for the Canadian economy before we look at the national house price index. So once you get these, then hopefully there will be some established trends to lead the markets into next week. So on the earnings front, we have seen companies reporting better than expected earnings. Tesla had better than expected earnings. Same case as Netflix. And today we have had some crazy volatility. So for Tesla stock, you can see that today it's down 8.72%. So the news were already priced in, and immediately after the announcement, we saw the market opening up with a gap downwards and has kept going down since. So on the other hand, Netflix, which was a big name expected today, also had a gap down and has continued to trade down lower at 8.97% today, basically implying that the earnings were already priced in. So upon the confirmation of the news, we saw the market taking the opposite direction. So it's more of an instance where we say buy the rumor, sell the news. So in this case, a lot of investors had bought the rumor, expecting that these two companies would beat earnings, and immediately after the announcement of earnings, they basically cashed out the positions, leading to a big sell-off. So it's quite a common scenario, especially for big name earnings, where the expectation is easy to speculate on. So if you look at the entire stock market, I don't think it has been pretty today. So if you look at FinViz, you'll notice that the entire stock market has been quite bearish for the day. So you just go to maps. So the big name companies have been contributing to much of the big gains we have been seeing. But of course, today tech has taken a big hit. You can see Microsoft, Oracle, Adobe, Nvidia, Google, Meta, Tesla, Amazon. All these have been losing, whereas other areas such as healthcare, energy, utilities, basic materials are quite on the positive. So these companies dominate quite a big weighting, or quite a big percentage of the S&P 500. And as a result of this price action, you can see what has been happening on the charts. So US equity indices started by a big sell-off early morning, and they have continued along that direction for the rest of the day. So that being the NASDAQ 100, if you look at the S&P 500, there was a sharp drop in the first hour of trading, attempted to make a recovery during the London session, and then in comes the New York session. And clearly there has been quite a sell-off, and it has been moving back downwards. So the Dow, on the other hand, has been moving even higher. So this is one of those crazy scenarios where we are seeing the big indices going down. Remember, when we look at the map here, what we are seeing here is basically the S&P 500 stocks going down, but a majority of the downside momentum is being contributed by the tech sector. So if you look at industrials, you'll notice that they are mostly green. So industrials, including Raytheon Technologies, Lockheed Martin, Boeing Company, they have all been green and performing really well for the day. So these may explain why the two top indices have been going down while one of them has been going up, and the one that has been going up is the one that is dominated by industrial stocks. So for the Dow, there has been some good momentum to the higher side, whereas SP 500 and the US Tech 100 or the NASDAQ 100 has been losing. So the dollar index, on the other hand, made a surprise comeback. So yes, on Monday, Tuesday, it was completely sideways. Wednesday, some good momentum up, and then Thursday, we have experienced quite a good rally for the dollar index. So a strong dollar basically implies one thing. We see the pound continuing to lose to the dollar. So it has been a big sell-off for the pound. For the Euro USD, it's the same thing. We have had this breakout happening. So notice this neckline that has been holding here. Every time the market gets to this neckline, it has been getting some support. But this afternoon, there was a nice break. And now we are seeing a very strong momentum downwards. And perhaps this will continue further down. So USDN, on the other hand, is on the verge of breaking the upper trend line. So the upper trend line can be traced to this area here. And this particular range or channel has been holding for 5 days. And today being the 6th straight day, there's a good chance we'll be seeing a break, especially if we continue seeing a strong dollar in the markets. So it's a matter of wait and see to see what happens around this area and whether the dollar momentum will continue towards tomorrow. So for the USD card, it was a straight up fall happening along this area here. So from the 15 minutes chart, this is what we had. The market was attempting to break towards the lower side here before buyers came in and pushed prices higher. And then the breakout actually happened towards the upper side. So now we are looking to see some potential for more momentum upwards after breaking this formation. And now some of the levels in sight include Tuesday's high as well as Monday's high. So we have already hit yesterday's high. You can see yesterday's high is acting as some form of resistance. So if we see some further acceleration in prices, then an area to be interested in is this high that the market was unable to break over 3 times. So if there's a further momentum upwards here, dollar being stronger than the Canadian dollar, then this could be a really nice target. So as for gold, we were expecting to see some further upside momentum early in the morning, but then what we saw later on is gold failing to break that area, which was a major resistance level. And once it failed to break that area, notice how we were projecting that it would get to this area here. So upon failing to move higher, we saw the reversal happening. And since then, gold has been pushing further back downwards. So remember, 1968 was a key price level for us. And this is before the price broke that area. So notice this area here where gold was unable to break for a couple of times. And now it has gone back to the same area. So while it was acting as resistance then, now it seems to be acting as support. So there is a good chance we could be seeing gold making a reversal here. But then if there's a clean break, then we look at lower price levels, especially around the area of 1960. So as for USD card, I think we have already covered USD card, sorry. So AUD-USD clearly making an impressive run early in the morning and then reversing. So remember the impressive run here happened as a result of the news that we had seen early in the morning. So just to take a step back. So early in the morning, this is when we had Australian jobs data coming in stronger than expected, where the economy created 32,000 jobs compared to an expectation of 15,000 jobs, and unemployment rate dropped to 3.5%, same level as the previous month, but the expectation was 3.6%. So this was quite positive news for the Australian dollar. So as a result, what we saw here is an acceleration of the Australian dollar against the dollar, got to this area where there was resistance and pulled back downwards. Personally, I expected this to continue moving upwards, but somehow these pairs could not continue gaining this way with the strength of the dollar being this strong. So this was more of a determinant of the market momentum today. So even if you are trading a really strong pair with positive news, you can see that all the gains are almost erased by now. So another important pair, and I think we covered this early in the morning, is Brent oil prices. Brent oil prices were clearly going downwards, found some form of support here, and this is a trend line that has been holding quite well since the bottom in June. So every time the market got close to this trend line, we found some good support and the market proceeded to move even higher. So it repeated again here in early days of July, 14th, as well as on 18th, bounced off very well and kept going up, then pulled back down yesterday. And upon getting to the same trend line, there was some form of sideways momentum before we had a strong green candlestick early in the morning. So here, the speculation was that the price would go up. Eventually, towards the end of the day, we saw a big surprise spike all the way down to around $78.6 per barrel. So immediately the price was rejected, and in the following hour, price continued to move higher. So this is an indication of a market that is rejecting lower prices. So from the 4-hour chart, this is how the candlesticks looks like. So it's more or less like a doji with a long tail towards the lower side, or a candlestick that we use to describe as a gravestone, save for the small upper wick here. So there is a good chance we'll be seeing Brent oil continue to rally higher. And if this plays out quite well, then the target remains the same, and UK oil continues to rally to the previous high of $80.7 per barrel. So another index that I remember discussing last week was the French 40 index, which made a very nice swing to this upper trend line, failed to break, retested twice, and then kept going down. But then this week, we have seen surprise strength happening in these equity indices. So Tuesday, Wednesday, continuing to move higher, go to the resistance, pull back downwards, and then today being last day, made another rally, and now we are testing the swings high. So the high was right here, around 7,404. So the thesis remains the same. So if the market is unable to break the 7404, then there's still some more room that we could be seeing some further downside momentum. So the Euro 50 index has tested twice. So this was the first time, second time. Then yesterday went up to the same trend line, failed to break and push back downwards. And then today you can see it's almost attempting to get to the same level. So from what we are seeing here, that is from the price action of these swings, we can easily identify the kind of direction that this market is taking by identifying this and this as the basis for a triangle, and then looking at the momentum this way. So there is a good chance that the market is trading along this momentum. So I just want to make sure I can plot this nicely. So hopefully I'll be able to do this. So on the lower side, it seems to be sideways. So I'll try to plot this sideways. So now this is the kind of triangle we are having. A market that is forming lower highs, but the lows seems to be equal. So in this case, if the market is unable to break the upper side, then the idea is to keep trading downwards, since this is happening along a major resistance line that the market was clearly unable to break. And the thesis is that the market continues pushing back downwards. So as for now, looking for bearish momentum signs might be very important in this chart. And once the market has exploited the upwards momentum, then perhaps it will be time to go down. So same case applies for the UK 100, which has been the most aggressive one in the bullish rally. So it happened to break this particular trend line in a very strong momentum that has lasted 2 weeks. And now it's approaching a previous level of resistance. And of course, the same level was acting as support. So I believe a key price level would be 7,689 for the UK 100 index. So testing this area will be very important. And from this area, we'll be looking for signs of continuation or even signs of a reversal. Potentially, signs of a reversal might make more sense, especially considering that we just endured a 2-week long bull run that has not happened in a while in the UK FTSE 100 index. So last time we saw such a big momentum was when the price had tested the same bottom here. The price rallied for quite a number of weeks before finding some form of resistance here. So among these one, there's still that potential that the market could be gunning for the other trend line here. So notice that we also have a trend line here. So if there's a break, then this might be the view in the markets after the break. So if it breaks this previous high here of 76.89, then 78.11 will become an interesting area. So another chart I've been covering quite consistently is the chart of Bitcoin. So with Bitcoin, we have been in a 4-week range, the market moving up and down, and overall basically being a sideways momentum. So from this particular day going this way, this has been the overall momentum in Bitcoin. So most important thing to observe right now is that the price of Bitcoin is at a point where it could either break towards the lower side or bounce strongly and head up higher. So we don't know what will happen yet, but if the price of Bitcoin happens to break this level, then it might imply a potential trading opportunity going back downwards. However, if there's a strong entry by buyers and price, we see, let's say, a strong candlestick green towards the upper side, then it might be the time to go for a bullish position. As for now, I think there is an opportunity, but we just have to wait and see. So judging by the correlation between Bitcoin and equity indices, if equity indices basically indicate some bearish momentum, especially for the NASDAQ and US 500. So if the NASDAQ keeps on selling like this, then we could also be seeing Bitcoin breaking towards the lower side. So I'm checking to see if there's any questions that have come up and I have not responded yet. Evening, Apollo. A basic question from me today on market sessions. From the calendar on Forex Factory, it indicates New York opens at 1500 hours, but I find stock markets open at 1630. Why is this? So I don't think the Forex Factory is the right website to check for the opening of the US stock market. I think the best way to check for the US stock market open is to check for the opening bell. I think there's a website for that. For instance, the New York Stock Exchange. I think it's .com/bell, if I'm not wrong. So every day when the stock market opens, they have a bell that is rung by different participants visiting the New York Stock Exchange, and they will basically log these here. So you can go through the bell calendar and of course the history of the bell, and you'll know when the market is opening. So the US stock market, if there is no holiday, will always either open at 4:30 p.m. or 3:30 p.m. depending on the status of the daylight saving time. So when the DST is on, then in that case, it opens at 4:30. When it's off, then it's basically 3:30 p.m. Hope that answers the question. There's also another way of checking it. I think it should be on Baby Pips. So you just have to go to babypips.com. I think it's under tools, then Forex market hours. So for Forex market hours, this will basically show you the market hours, the different sessions. So you know that the New York session will basically be opening. Sorry, I think there's an issue with my ad blocker, but hopefully you get the point. So I'll be sharing the link to the two websites so that you can check them on your free time. So I'll be dropping this on the comment section. I don't want to waste the time trying to set off my ad blocker. I actually added the ad blocker for a reason so that I don't get ads. Now they are forcing me to get some ads while browsing their site. So evening, Charlie, there's Robbie, Kevin, and Jack. Hi, Christine. Welcome to the session. What can we expect on FOMC? So on the FOMC, the Jerome Powell has been quite clear on the expectations for monetary policy. So on one side, the US has not yet achieved the target of 2%. So there's no way Jerome Powell is going to stop hiking interest rates until he gets to the 3% target. So yes, there was a one meeting pause, and now we're expecting a rate hike in July. That is next week. So the potential for another rate hike is already being priced in the markets. So the difference is that this could be the end of the rate hikes, especially considering that the Fed is achieving its targets. So for all the parties that have been on the losing side of the rate hikes, I'm sure they will be there in the meeting, or they will have someone representing them trying to push Jerome Powell not to continue hiking interest rates because it has achieved its target. But we know it has not yet achieved its target. But as we all know, interest rates take longer to have a full effect in the markets. So In this case, there will be more pressure on Jerome Powell not to hike interest rates. So depending on what they decide by then, there will be some clarification on future policy on whether they are going to continue hiking interest rates or whether they are going to pause at that level and then hold rates there until inflation stabilizes around the 2% target. So on the other hand, there are lingering issues in the US. One, manufacturing is really slowing down, perhaps even entering into a recession. But then the services sector in the US is really strong. And this is creating a lot of jobs and creating a very tight labor market. As a result of that, we are seeing even more money being present in the economy. On the other hand, there's also the issue of fiscal discipline. So the US is basically spending more and more. The Biden's administration has no problem spending money in the economy, and the fiscal budget is providing some form of stimulus in the US, which is basically leading to higher stock valuations. So from the earnings season, which basically started last week, we are seeing more and more companies reporting bumper earnings. We saw it happening in the banking sector. Now we are entering the tech sector, and clearly Netflix and Tesla are key indicators of how well these companies are doing. So on top of that, there's the issue of interest rates. So with interest rates being this high, there's a lot of American citizens and of course corporations that have put their money in US bonds, especially the short-term ones. So they have been benefiting a lot from this, and this is an expense from the government. So the expense on debt has basically surpassed the defense budget in the US, and this is serving as an stimulant to the economy. So far, the US is spending around 850 billion annually to service its debt. So for a lot of people that invested their money in bonds, they are harvesting about 850 billion, and this money eventually finds itself somewhere. Since it's not going back to bonds, most of it is finding itself in equities, in real estate, and so on. And this is a background factor supporting the high stock valuations that we are already seeing, with the Nasdaq making a record rally in its history. So as long as there's more money flowing in the US, stocks are going to remain significantly high, and it's easy to assume that the price will continue going up. So for Nasdaq, SP 500, Dow Jones, I expect that these indices will continue driving higher up until something is done about spending, and of course, the interest rates are being yielded by these bonds. So for now, that remains the potential. On the other hand, as for the dollar, if investors are pricing in the potential that this is the last rate hike, they don't see any other rate hike coming in this cycle, then in that case, investors could consider selling the dollar and go for other currencies where they expect interest rates to move higher. And that's why I had a thesis the other day, basically saying that the pound has been really strong. The euro is also strong. But the fact that these two economies are basically suffering from high inflation, it means that their central banks may have to do more to hike interest rates higher in order for them to control inflation. And these high interest rates would be largely beneficial for FX traders as well as bond markets traders. So by buying more bonds in the UK and the Eurozone, then we could be seeing their currency strengthening. And as a result, we could be seeing a rally happening in pound USD as well as in the euro USD currency pair. And that's a longer term view. It's not something that I'm saying will happen tomorrow or on Monday. That could be an overall direction in the market. And of course, when you have an idea of the overall direction in the market, then you try and avoid trades that go against that direction. And of course, you have to obey what price is telling you. So if price is showing you, let's say, an upwards trend, you go long. If it's showing you a downward trend, then you make sure that a majority of your trades are according to the direction of the trend. So I hope that makes sense for everyone. So I think I've already commented on the NASDAQ and how the tech sector has been dominating the growth of the NASDAQ. So the fact that we are seeing more fiscal indiscipline, basically the US spending on a deficit and the deficit getting higher and higher, bond yields giving some good returns, and all this ending up in stocks. Of course, nobody is buying the boring stocks. People are buying the top stocks, the ones that are doing really well, the mega cap, the AI stocks. And that's why we are seeing stocks like Nvidia being up over 200%, Facebook being up over 100%, Tesla up over 60%, and so on. So I think this may be the core reason why we are seeing the mega stock companies in the US making some big gains. So which two pairs would you advise a beginner to do? If you're a beginner, I don't advise that you focus on one or two pairs. If you're trading on a demo account, experiment with everything. Try trading indices, try trading stocks, try trading ETFs, try trading gold, try trading oil, silver, and all manner of currencies. So as you experience these different assets and see their movements, then you'll know which one you're more comfortable with. You'll be tracking your progress. You'll be journaling your trades, and you can see which markets best work for you. So once you go through all that, then you select the markets that you want to trade. But if you blindly ask Rufas to tell you which two pairs you should trade best, if I tell you Euro USD and let's say Pound Yen, you will have missed on all the other pairs, and maybe another pair was the best for you. So the best outcome is for you to try that on a demo account, see which markets you're more comfortable with, either volatile markets or a less volatile market. So I think that's one way of looking at it. And of course, if you are doing scalping, then you might be concerned with spreads. So you might be looking to trade the majors, which tend to have much lower spreads than the crosses and the exotic currencies. So I've covered some of this content significantly in the Novice to Pro series. So if you're a beginner, kindly go through the Novice to Pro series. I've gone through all the basics. It's available on the FX Pesa YouTube channel. Just go to FX Pesa on YouTube, then click the channels, look for Novice to Pro, and then go through the 10 episodes. I was thinking dollar index would start to go up. Yes, the dollar is usually very strong. It doesn't remain depressed for long. So the fact that you are seeing the dollar index being really weak over the last 2 weeks was only temporary. We know that the dollar always makes a comeback. So despite having all this pressure, where we had the big sell-off happening here, notice how it traded sideways for like 3 days, and then yesterday it broke to the upper side, and today continued with the momentum upwards. So if this continues to happen, to continue, especially tomorrow, then some more downside could be expected. So for USDN, they could potentially break this and move higher. Whereas for USD CAD, would be seeing a potential movement even higher. For Euro USD, some further downside momentum. And of course, for Pound USD, even further downside momentum. So we don't know this yet. And of course, for something like Pound USD, you can see we have already hit a major resistance level, which has been turned support. So perhaps this could be the price level we were or waiting for. But remember, for Pound USD, as I mentioned early in the morning and in other sessions, I'm still very bullish because inflation is high and the Bank of England is expected to continue hiking interest rates. So this might be an area to start looking for a potential entry point. So yes, I know it doesn't augur well with the overall trend line. So this is a trend line that has been there for quite a period of time. I think this is since November last year. So the trend line has been holding on quite well. We have 1, 2, 3 hits on that trend line. But if the trend is getting stronger, then it basically changes direction. So from here, you can see that the trend is now taking this shape here. So we have the first hit here, the second hit, and potentially a third hit. But then if this resistance is acting up as very strong and buyers take this advantage and enter at this point, then the potential for a rally towards the previous high would be significantly higher. So it's a wait and see kind of situation. See whether there is a strong entry by buyers around that level. So the idea is to go long when the pound is weak and gets to a support and there's evidence of entry by buyers. So it already happened here yesterday in the evening, but it did not last for long. Perhaps, or maybe this could be it, and could be a potential entry opportunity for a good bull run. So another comment here. Thanks for the answer on session. So stock market and New York Open are different things. Yes. So when we talk about the US stock market open, we are basically talking about the time when US stock markets open. And of course, the top stock markets are the New York Stock Exchange and of course the NASDAQ. So when the two open, they open at 4:30 p.m. But then what is different is the New York session. So the New York session basically refers to a period of time when the Americans and not just Americans, we also add the Canadians in the group, the Mexicans in the group, and other guys around the same time zone. And we look at when they generally enter the markets. So while their stock market will be opening at 9 a.m. their time, by then forex traders, commodities traders, you have already entered their desks. The banks will be open, operations will be happening. So if a company like, let's say, Apple, Amazon, or even just a Citizen wanted to transact in the forex market via their local bank in the US, by 8 a.m. the bank is open. So in that case, we are already seeing volumes happening in the markets. So in Kenyan time, from 3 p.m., we're already seeing activity or more liquidity coming in from the US. But then when it comes to stocks, so the stocks will open exactly at 4:30 p.m. That's when we'll start seeing activity happening in the US. So I hope that differentiation makes sense. So I think I've already covered what to expect on the FOMC. Hello, J Squad, welcome. Is the Nasdaq revising the weights of big cap stocks on the index? How will this affect the index? I don't know whether they are revising the weights. I've not heard about that, but I don't think it will happen so soon. I'll be checking on that to see if they are revising the weights, but I haven't seen it happen in a while. So mostly you will find that if the companies are doing well, the Nasdaq is up, everyone is happy, there's usually no need to revise the weights. Unless there's some small companies that have really grown and they need to negotiate more weights. Hello, Prabnik. I am hoping that's the right pronunciation. So from the financial Jews, the need to know market risk for today is that the Fed swaps or the Fed swaps market is pricing in higher odds of another rate hike after July. So the fact that we are seeing and are expecting at least by a 90% likelihood that the Fed will hike interest rates in July, then the swaps are also pricing in a potential other rate hike to be happening after July. So that basically means that the dollar could continue strengthening, and these swaps could be the one fueling the rally in the dollar. And if this happens, then we know what to do. We basically buy the dollar and pair that against other weaker currencies. And one of the weakest currencies, as I've been mentioning over the time, seems to be the Japanese yen. And of course, any other central bank that has decided not to continue hiking interest rates. So US Senate backs the defense bill amendment to bar US sales to China of oil from the strategic petroleum oil reserve. Voting continues. So President Biden has been accused of selling oil from the US strategic oil reserve and basically selling directly to China. This has led to a lot of controversy, and Senate is looking to block that move. So currently, US is running low on reserves, so they cannot afford to be selling oil from their reserves directly to China. That would be a bad move. I don't think that would have a big effect on the markets, but as per now, oil being a hotly contested issue, that is oil supply, there's a good chance we will be seeing oil retesting the $80 price level. And that by oil, I am implying Brent oil. There's usually some significant difference between the price of Brent oil and of course the price of US crude oil, or what we call the West Texas Intermediate, commonly abbreviated as the WTI. So I don't think there's any other need to know market risk. So the chart of the day remains the same as of this morning. I remember when we covered the market snapshot at 11 a.m. East African time, we mentioned that the chart of the day is Brent oil. So it was at around this area. So the recommendation was to trade the bounce and expect some higher price action movement. Notice this did not last for long. The market managed to rally to slightly above $80 per barrel. So this is what we saw, 80.124 for Brent oil. But then it dived all the way down. So notice the red candlestick here. We know that the red candlestick opens here, go to a high of this point, all the way down to this point, and then closed here, indicating a very strong attempt to push prices lower and break this trend line completely. But then in the following hour, price goes to a low of this point, a high of this point, and then closes here, basically reversing the action of the previous candlestick. So this is indicative of a rejection of lower prices and a strong entry by buyers. So in this case, there's a good chance we will be seeing some higher prices happening in Brent oil prices. So this remains the chart of the day, further affirmed by the price action of these two candlesticks, which basically indicates a reversal and a rejection of lower prices. And the price that was rejected was around $78.6 per barrel. So in this case, the expectation is that oil prices keep going up. And of course, the immediate target seems to be yesterday's high of around $80.74 per barrel. So that's it for the day. Thank you very much, guys. Thank you for your time. And I hope to see you on the next session. So remember, tomorrow's sessions continue. It will be happening at 11 a.m. and it will be hosted by one Samson Mzera from Eldoret. And hopefully you'll get to gain something and gather more insights on the price action. Do you expect volatility tomorrow on US pairs? Absolutely, absolutely. From what is happening with the Fed swaps, if they are pricing in a second rate hike, then perhaps that's a reason enough to see the dollar continuing to rally against other pairs. And we have already discussed what to do in case we happen to see the dollar continuing to be strong.